A massive collapse is coming, one which will usher in a new monetary system, one which will be the focus of books, articles, and have its place in the pages of history. We have anticipated this for some time, and the thread which holds this system together is ready to give way, irritating and agitating this looming crisis. There can only be one solution which benefits us: to significantly reduce the amount of debt on the supranational, national, state, provincial, city, corporate, and personal levels. This, of course, will never happen. Instead, we will face the truth. You came here for the truth, so let me unveil that for you. Today we are going to talk about the global financial system crashing. Let's begin with this out of Bloomberg. The S&P 500 index closed a volatile session, little changed, near the lowest level since August, as gains in consumer shares offset declines in commodity companies amid fresh signs of weakness in crude oil and corporate earnings. Nothing's changed. This is the exact same information that we've been talking about since essentially the beginning of the year. It's just continuing. And they say that little has changed. They're waiting for a decision. They're waiting for perhaps the Fed to make a statement. They're waiting for some more money printing. The government needs to come out and say something. So then they will react to that. Stocks couldn't sustain an opening rally and weakened throughout the day before rebounding after reaching the lows of August's sell-off. Of course, the rebound is the plunge protection team. That's the high-frequency trading. That's everything that supports the economy, or not the real economy, but the fake economy that they've put in front of us. There is more detail in the article, but I don't really like to get into too specifics for this type of information. There if you need it. This is out of the Telegraph. The global financial system has become dangerously unstable and faces an avalanche of bankruptcies that will test social and political stability, a leading monetary theorist has warned. Now remember, this isn't the Money GPS saying this. This is actually from the BIS, B-I-S, the Bank for International Settlements. Listen to this. The situation is worse than it was in 2007. Let me repeat that once again. This situation is worse than it was in 2007. How many times have you heard me say that? How many times? Hundreds, maybe? Just in the last few years? Our macroeconomic ammunition to fight downturns is essentially all used up. That's correct. Interest rates down to basically zero, in some cases negative. They've done all the TARP type bailouts. They've printed all sorts of money. They've created derivatives. They've put trillions of dollars off the balance sheets. Still, all of this has not been able to support the economy. Why? Because it's dead. And this right here is the Swiss-based chairman of the OECD's review committee and former chief economist of the Bank for International Settlements. So this individual, high-level individual, whether it's from the OECD, whether it's from the BIS, doesn't matter. We're talking about these supranational type entities, and they make statements all the time. We do hear about the IMF warning about things all the time. Do we necessarily want to trust everything they say? No, they have an agenda. But it is good to listen and to use our own judgment. Debts have continued to build up over the last 8 years, and they have reached such levels in every part of the world that they have become a potent cause for mischief. Once again, it doesn't take a genius or a crystal ball. You don't have to be a soothsayer to figure it out. There's too much debt right now. And right here he says they've reached such levels in every part of the world. That's always what I talk about, how this issue stretches from any corner of this globe. The monetary base, this is a diagram that I show in my book a couple times over different years that I'm showing this. This shows you from 1918 to approximately 2011. And what you will see is that beginning at that financial crisis, they have expanded the debt to levels that it was never seen before. They had accumulated a large amount of debt from 1971 up until the financial crisis. Very, very high levels, which had never been seen before up until that point. But it multiplied multiple times in a short period of time, and it continues to do so, where the books are significantly higher than they are in this diagram here. We're looking at about, let's say, 4.5 trillion. This happens to be only, not even 3 trillion. So this shows you an even greater number, but it doesn't even matter at this point. It cannot ever be paid back. Something big has to change. Big banks are lending less to home buyers, or they're making less on loans, and sometimes it's a combination of both. This is some interesting information. I'll read this to you, but I have something else to get to. Some are making less on home loans, in part owed to the Fed and its years-long zero interest rate policy. But the trend also coincides with a rise in non-bank lenders like Quicken Loans that have been gobbling up market share in mortgages in recent years. They do touch on the zero interest rate policy. What I want to suggest to you is that look around the world. In many cases where you have these booming real estate markets, you have low interest rates. These low interest rates will fuel the bubble of real estate. It's a simple matter of fact. If people don't think that they're going to get any money from their savings accounts in the bank, they are more willing to spend that money. They may spend it on, let's call it frivolous things, or they may indeed decide not to become a renter, and they will purchase a home, use that money, take more of a mortgage considering the money is so cheap, and use variable mortgages, which are in Canada right now. The last time I checked, if I'm not mistaken, it was lower than 2%. Think about that for a second. Less than 2% on a mortgage, variable interest rates. They're thinking, well, why not? The market seems fine. They're not going to raise interest rates. They know that it will collapse the housing market. Why would we do this? But of course, it has to happen eventually, or they're going to have to print a heck of a lot more money than they have done. Francois Hollande has returned to traditional left-wing tenets for the last-ditch plan for cutting persistently high unemployment and salvage his chances for re-election next year. This is a quote saying France is in an economic state of emergency. This is out of the Financial Times. Whenever there is an election, you need to understand that they have obviously a political incentive to get things going again, whether that's through a TARP-type bailout, public works projects, anything. The measures, which the president detailed in a speech on Monday, involve a creation of 500,000 vocational training schemes, additional subsidies for small companies, and a program to boost apprenticeships. Basically, they want to create jobs, and they can do so by offering it in this way. They can create public works projects. They can hand out a paycheck to each and every person, hoping that they'll spend it, bring it back to the economy. They have a lot of options. None of these, of course, are long-term solutions. Everything is always a Band-Aid fix. It's going on in France, and it's also going on in Italy. Italy bank stocks plunge. Brokers say tough 2016 ahead. You don't need to be a broker. You don't need to be an investor or an analyst to figure this out. Italy bank stocks down 17% this year so far. This is an extreme level at this time. We haven't even gone through a month yet in January at the time of this recording, and already the stocks are down significantly. Well, this doesn't surprise me because the banks are very, very weak at this time. We will definitely expect the bail-ins to occur. What is a bail-in? Well, that's when the bank steals money from you, and they call it bail-in, not stealing money from you. That's right. When you put your money into the bank, the money becomes theirs. It's not yours anymore. See, you think it's yours, But unfortunately, when they call a bank holiday, that's just the way it is. Now, I don't know if any people are aware of this, and I'll just interject with this fact. A lot of people are invested in mutual funds. We're talking about billions of dollars in single mutual funds in certain cases. And people dump their money in there hoping for a return, and in some cases they do get good returns for non-sophisticated investors. And a lot of these individuals are not aware that at some point these funds could become capped. They can cap the fund, and in doing so, that basically prevents anybody from being able to sell their positions. Depends on the scenario, but people are not able to sell their positions. So you have, let's say, I don't know, $10,000 inside this mutual fund, and that mutual fund decides we're going to cap this fund. And like I said, many different, there's more detail to this, but there are certain cases where you can't get your money out. And that's a mutual fund. That isn't just stocks. That isn't just a bank. They have the ability to do this in any type of paper asset. Remember that. That is very important to note. If you think, well, my money's not in the banking system, it's with this private organization and they have their own mutual funds and I feel safer there. Don't feel safer there, because it is absolute truth that your money could be locked up in any paper asset. Sure, in other types of assets as well, you can be held out of that asset for certain reasons, but paper assets, it's the easiest. And this is something that I just wanted to note. Saudi Arabia buying up farmland in the U.S. Southwest. Saudi Arabia and other Persian Gulf countries are scooping up farmland in drought-afflicted regions in the U.S. Southwest that has some people in California and Arizona seeing red. What I would just want to mention from this is that the Saudi Arabia and other Persian Gulf countries are not the only ones. We have seen China, we've seen big billionaire investors do the same thing. Now, in this case here, Saudi Arabia, they're basically buying it up here and then shipping those crops back to their own countries. And the reason they do this is they want to preserve the resources of their own nations, so they can use the water of California, Arizona, and even though they have their own problems right now, they can use their own water here, ship it back over there, and this seems to be a better way for them at the time. I would just like to suggest that land is being purchased for, by different groups, different organizations, countries, and billionaires and millionaires and everything, and a lot of things are changing hands right now. I'd like to see where this all plays out, but remember that not just farmland, but land in general, or big plots of land and everything. I have covered it here on the channel before. Things are certainly changing. Let's keep our eyes on this. If you found this video informative, please give me a thumbs up. If you're not already, you need to become a subscriber on this channel. Last but not least, if you found the video informative, then you'll definitely find my book, The Money GPS, even more informative. If you head over to Amazon, they have this look inside feature. It allows you to flip through the pages of the book and see if you like it. Take care.